I am completely obsessed with AI. A few years from now, I think that we will not go to shops online or offline, and instead we'll ask some personal assistant, see this picture or whatever. Remember Tom Cruise in Mission Impossible 6? I'd like the bomber jacket that he wore, and I'd like it from an eco-friendly company with zero hassle return. I'd like to spend $500 to $600, but if it's a little more, all right, where do I go? And there's the answers. If I had to put money on it, it will make the so-called smartphone revolution look like a relatively small thing.
I want to welcome you to the second season of Couchonomics with Arjun. Join us this season as we go beyond fintech and payments and embark on the journey into the future of financial services, a future which will be shaped by existing and new developments in technology and innovation, including and not limited to the likes of embedded finance, open banking, ESG, various versions of metaverse, decentralized finance, digital currencies, and other trends. On the couch, we're going to have the most influential and progressive-minded founders, executives, investors, regulators, innovators, and industry commentators from across the MENA region and beyond. Join us as we unravel a multitude of layers of the financial services industry and try to learn how technology will continue to impact the world that we live in. Couchonomics with Arjun is proud to collaborate with some of the most respected and innovative names in the world of payments, fintech, and technology. Arjun is a reliable end-to-end payment solution that provides innovation and flexibility to help businesses achieve their ambition faster by turning payments into a strategic growth driver. Get everything you need with 2U, a Saudi-based super app for delivery, mobility, on-demand services, and a lot more. 2U connects you to everything you need to enrich your daily lives by building an ecosystem across its end consumers, merchants, and reps. Visa is a world leader in digital payments with a mission to connect the world through the most innovative, convenient, reliable, and secure payments network to enable individuals, businesses, and economies to thrive. Geidea is a leading fintech and payment solution provider founded in Saudi Arabia, expanding rapidly across the region with established operations in UAE and Egypt. Geidea's vision is to empower merchants with the tools to start, manage, and grow their business. M2P pioneers next-gen fintech through innovative offerings across payments, lending, and banking landscapes. Their comprehensive tech stack powers end-to-end banking services, BNPL, customized credit cards, prepaid cards, and more. Hello, everybody. Welcome to today's episode of Couchonomics with Arjun. This is your host, Arjun. And this is an episode I waited quite a long time. Actually, I wanted to schedule this in season 1, but my guest wasn't available. So we've got him on season 2. So my guest actually is the group CEO of one of the, most well-known fintechs there is in the region. So the fintech I'm talking about is a very well-known fintech, headquartered or born out of the Kingdom of Saudi Arabia, but now has a presence across the region. The gentleman I'm talking about is Renier Lemmens, who's their group CEO. And if there's one thing I do know about Renier, he says it the way he sees it. So with that, Renier, welcome to the couch.
Thank you, Arjun. Good to be here. It was indeed long in the making. That way, I think I over-delivered already compared to the promise of blockchain.
Okay.
At least we've delivered this, correct?
I'm
here.
Your timing couldn't be more perfect because the episode which we just released this week was all about blockchain, right? So we're not going to get into that. But no, Renier, good to have you here. And thank you for making time to be here. I guess you spend a little bit more time now in the UAE than you did previously because of your expansion in the UAE.
Indeed, and this week with Seamless going on, I've been here the whole week. Basically.
You've been here the whole week, and I hope Seamless has gone well. I unfortunately couldn't make it because I guess the life of a consultant is more time spent on an aircraft, less time spent having fun on in these events. But Renier, we have about 45 minutes to an hour. I'm very keen that we're able to sort of deconstruct and talk about not just Geidea as a business and where it's heading, but with your experience on the topic of payments in fintech, I would want to kind of ask you a few searching questions,
Sure.
and get your point of view, both in terms of what actually exists in the region and where it's heading. But sort of before we get there, and because we have a very wide audience, and actually our audience reach goes as far as Europe and even the US and parts of India, I think it'd be a great place to start with you just explaining to us, what is this business called Geidea? Where does it come from? Right.
Yeah, Geidea is indeed one of the largest payment fintechs in the region. Originally founded in Saudi Arabia, now almost 10 years ago, as an MSP for banks in the kingdom. But since 2019 in acquiring, which is our fastest growing business, where we're now active in Saudi Arabia, Egypt, and the UAE. And doing quite well. We like to think of our business as helping merchants grow and manage their business, not just taking payments. And that in and of itself is already a sideway in our ambition to be more than a payment provider only.
So specifically, let's talk about it, right? So obviously you've had 10 years in Saudi Arabia, right? Egypt and UAE are relatively new, right? Is this about replicating what you have done in Saudi Arabia successfully, or is the model adjusted to these two different and actually quite different markets?
It's to an extent replicate, but a lot of adaptation, because the markets are really quite different when you start looking closely at them. Saudi Arabia, Egypt, and the UAE at completely different stages of payment maturity, different customer needs, different populations, different fee levels, different dynamics. So from a distance, they look similar. The closer you get, the more different they look. So it's not just replicating.
Can I put you on the spot? Could you just walk me through something?
Sure. I mean, take, for example, the contrast between Egypt and Saudi Arabia. I mean, population size is an obvious one. Egypt is at a much earlier stage of the cash to digital conversion. In Egypt, cash is still very important. It is important to our business model as well. So in addition to doing digital payment acceptance, both at the point of sale and online, we have a big payment business that we are building, a bill payment business, which still has thousands of Egyptians showing up with wads of cash at our merchants, who are in the end our customers, to pay their utility bills and other bills. Now, that's a business that is quasi-irrelevant here in the UAE. And that's a very visible example of how the countries are still very different.
Of the differences. Now, so I'm going to make a statement, and it's a bit of a sweeping statement, so correct me if you feel like it, right? If you take the 100,000 feet view, right, payments as such, and I agree you are a lot more than payments, you're going beyond payments. It increasingly feels like it's a red ocean out there, right? In the sense there's quite a lot of players already, right? Some of the economics are heading, if I may say, in the wrong direction, right? In terms of whether it's interchange-based income, the fact that, in a number of countries, you're actually seeing public infrastructure come up, so on and so forth, right? In this space where there are a lot of smaller players compared to you, I guess, competing and nibbling on your toes or on your heels. How are you guys differentiating?
In the end, I think in payments, it's about doing 100 small things right.
Okay.
And doing them right all the time. Because if you don't, the customer, and you're dealing with their money at the end of the day, is going to be unhappy very quickly. So whether that is the process of signing up, where, for example, in Saudi Arabia, we are still the only payment provider where you can sign up digitally without ever seeing anyone from Geidea.
Okay.
All managed by our local team, and we're replicating that now in the other countries. To when you need to see somebody, and where in Saudi we got 500 people in cars going around the kingdom, making 3,500 visits a day to merchants who need our support for whatever it is. And to paying these merchants on time when they expect it, and when there is an issue, which happens, of course, all the time in business, dealing with that in a way that is responsive to the merchant's needs. So it is, in fact, in the end, about customer service enabled by technology.
Okay, and that's very, so you said you got to get 100 things right? So it could be death by 100 cuts, or, we can have 100 celebratory events. How do you actually manage the operating model? So how do you actually make this happen and then make it happen at scale?
I mean, it sounds like a platitude. In the end, it's about people with a bit of process enabled by technology. And clearly, there was work to be done in the company. There is work to be done every day because we also learn from the best around the world. Oh, well, we should be doing that. We should explore this. And let me give an example of how we apply the latest technology in a way that perhaps not everyone does. So we have these 500 technicians going around the kingdom. And we've been thinking about how do we optimize that, how we make sure that the merchants get the best service while we minimize our costs. So we did a collaboration with a artificial intelligence company who used machine learning to do optimized route planning.
Okay.
Now, it will in and of itself not be sufficient for us to create a point of eternal distinction relative to the competition, but it just helps being that little bit better on something that really matters to the customers. Another example, building that digital funnel, which our marketing colleagues have been driving, it's commonplace in other markets. Here it's very difficult. And figuring out how you deal with the regulatory requirements around KYB and KYC while still creating a smooth customer onboarding journey, supporting those customers who are not used to onboarding like that along the way as needed, is it's no mean feat, frankly, at the end of the day. So there's a lot of nuts and bolts, blocking and tackling. So my experience here is it's not sitting back and taking out the strategic notepad and say, oh, let's do some high-level stuff and declare a strategy, and that's how you win in this market. It is knowing the specificities of each local market and doing it day to day, and sometimes, frankly, hour by hour or minute by minute.
I used to have a boss who used to say, do the utterly obvious utterly well. So I guess the takeaway for me is there ain't any silver bullet every day.
No, and as you call it, red ocean, there's a lot of competition all around the world. Payments is the first area. It was in every market the case. It's the case in these markets as well. Why is it? By and large, because the incumbents are really bad at it. We are still... I mean, you need to only look here in the UAE where more and more the banks are getting out of it or they're spinning it out altogether. That's exactly what happened in Europe and America.
Yep.
In KSA, in Saudi Arabia, the banks are still holding on to the payment business. They still believe that they can innovate fast enough to keep track and keep pace with the fintech ecosystem. I don't think that's going to last. But and we're telling the banks that, but that's an interesting debate to have with them.
No, but I think there are banks increasingly, and I guess if I was to wear my consultant's hat, which is my day job, I do think that they are waking up to it. Maybe slower than you want them to, but I do think that there is a conscious decision with at least the top 5 or 7 banks that I've come across that they are starting to look at payments from a perspective of there must be more than just keeping it in-house. Right. So I do think it's sort of moving, right? But the question I actually have was then how do you engender that level of, constant rethink, constant reinvigoration, constant re-innovation? Doesn't it get tiring?
Some days. Look, to be fair, first of all, the answer is it's all about company culture.
Right.
This is not done with process design and then hoping that by now we're almost 2,000 people, that they follow the process book day by day to the letter. It is about inculcating a certain culture in the company. And for us, customer orientation, of course, is very, very important. But it comes with a boldness, bold is one of the things that we talk a lot about, being real, meaning we name problems rather than pretend that they don't exist. And in this part of the world, that is not a given.
Right.
To create a culture whereby people who are more junior in the organization feel free to speak their mind about issues so that together we can solve them it takes hard work. And my mantra for the company has very much been culture eats strategy for breakfast. I much rather, if I had a choice, a company with a great strategy but a lousy culture, or a company with a lousy culture, a great culture but a lousy strategy, much rather go for option 2. Because the strategy is easily changed, where culture takes a lot of effort. And I'd say that in my 2 years now with the company, the senior team and myself are spending disproportionate part of our time on creating the right culture, trying to lead by example to the best of our ability.
Interesting. Interesting. You left a question out there, customer centricity. So let me just ask a question. Who is your target customer? Because It's a wide spectrum.
For us, we have two customers. The banks are still very important customers.
Okay.
They're also competitors, so it's a bit schizophrenic. In the morning, our customer; in the afternoon, also our competitor. But the key customer for our growth business in all our markets is the merchant.
Right.
Merchant broadly defined. That can be a very large one. It can be a startup. It can be a freelancer. Somebody who wants to grow their business, who needs to participate in the cash to digital conversion, and to whom we are providing a series of services.
Can we hone in a bit? Okay, is there a segment? Because see, so I worked on the merchant side of the business on payments for about 5 to 6 years of my life. I worked with a very, very large conglomerate, which had X% of this country's GDP, right? Versus the store down the road, which is a successful store, but he or she runs a store. Who are you really, really focusing for?
It is really more SME focused. We have large merchant customers as well. But the fact of the matter is, for us, like for anyone else in the world, the money is made on the long tail. Yeah? You serve the large merchants, but they obviously have a purchasing power and a negotiation power. As you will know from your own past, that is second to none. So, we're talking single basis points, low double basis points of margin when you work with those customers. And we are much less of, that's not really where the focus lies when it comes to profitability. We do have a significant part of the business there because of our ability to integrate in a flexible way, which frankly the banks cannot, and we do that on behalf of our banking customers a lot. But the real growth focus lies on the large number of SMEs in these markets that are not particularly well served by the incumbents.
And that's been the story for I've been here for a decade. That's been the story for over a decade.
And it's everywhere.
Yeah.
Look, in my past experience in payments companies elsewhere, it's always the SMEs where the incumbents, which often are the banks, but even the large payment companies that are well established in Europe, the WorldPays of the world, they find it really difficult to serve the long tail. And that's where companies like we come in, because we can tailor our business system to focus on them.
Okay, but there are two straight challenges, right? And I'm sure there's a number of challenges with SMEs, right? And I'm just going to focus on two so that we don't just only talk about this one topic. One is cost of customer acquisition, right? They tend to be higher cost to acquire, right? Or at least that's the view. Secondly, they are disloyal to an extent. They want to play the rate arbitrage. And thirdly, I think increasingly their expectation from any financial services provider is what more can you offer, right? So if I take the first and the second last question, which is, how do you get the CAC question, right, solved that you're acquiring at a rate and at a pace which is efficient? I'd love your answer. And the second piece is, how is the Geidea business model evolving? How is the operating model evolving where you can answer that demand, which is what more can you offer?
Yeah, it's very timely. I was just today presenting to our investors, or rather the investors in our investors, how are we doing that? And our so-called CAC to LTV ratio, or LTV to CAC ratio across the portfolio is 12 times. So we effectively make 12 times more money than we spent on bringing a customer in. Payback on CAC is a little over 2 months. How do we do that? On one hand, by having a really cool team that does digital acquisition, where, as I said, we are the only ones in our markets who are acquiring digitally. That creates certain advantages almost in terms of channel dominance, and that is a very good channel to bring thousands of merchants in the markets that we operate. Second, it's good old Salesforce effectiveness. Making sure that the feet on the street are making enough visits a day and convert enough. And that is old-fashioned Salesforce effectiveness management. With regard to the loyalty, merchants are loyal, but they're most loyal to the one that gives them most value, correct?
Exactly.
And
why not, right?
Well, that's what they should do. And part of our strategy there is to evolve our offerings by tying the merchants in more and more. And in that context, we just last year launched, we call it Geidea POS. It's the point of sale system. It's basically ECR Plus that ties us more directly into the merchant's own business, which makes it harder for merchants to switch out. Because, you're fully integrated, it all works well. You start thinking twice. Versus on the other extreme, if you just have a payment terminal that you plug in and out, the switching costs are very low, especially in Saudi Arabia, which has its own rules and regulation around ability to charge for terminals and what have you. So the answer here differs a little bit by country, but the Geidea POS initiative is important across the road to build a closer relationship.
And how's been the traction on it?
So far, so good. Early days. I mean, you start a new business.
Sure.
The plans are, ambitious. We're on track, and at the same time, we have a long way to go. So I'm cautiously optimistic that it was the right bet to make. For us, it's a point of distinction, and it's hard work to make sure that it comes to the fore and that you are delivering. Because now you're not just delivering a payment service; you are now delivering a mission-critical system for a merchant that needs to be always on. And if you slip up, there's very little forgiveness. So it brings us back to this: you need to do 100 things right.
So Renier, what about? And this is a question again. I'm not suggesting you need to share your strategy, but if you want to even give us a sneak peek, that would be great. But what's your view? Because I think there are a number of payment players, at least globally, who have started to introduce not just software-based solutions or hardware-based solutions, but actually financial and finance solutions, right? I don't want to name anybody in particular, but there's one particular player who's working very closely with Shopify, right? And they power basically Shopify Capital. Is that something you're already doing? Are you providing lines of credit? Are you providing products such as buy now, pay later on the point of sale?
We mediate.
Yeah,
so
mediate,
we are
right.
brokers. We are
exactly.
We're not going to commit our own balance sheet. That's a whole different business, and it frankly doesn't suit us. But I take Egypt as an example. We're furthest along. On our payment terminal, a customer who shows up can choose from 4 different buy now, pay later methods, 3 different installment lending. It is very busy on that terminal. So your checkout methods. There's 6, 7, 8 checkout methods that are very much in line with what the Egyptian market needs. And similar integrations are either on their way or in place in the other 2 markets. In KSA, POS financing, as we call it, advancing merchants with growth capital with the POS revenue stream as a collateral. We are dealing with several financiers who we're basically providing them with access to our customers, and that is a very fruitful relationship that helps them, helps our customers, and helps us.
And creates stickiness, right?
Yeah, because once you have that, it becomes very difficult to switch out when there's loans outstanding, and you don't want to, because going through the underwriting process with the lenders is in and of itself fairly time-consuming. And once you get it sorted, you want to stay there.
Yeah, I guess fundamentally, at least I'm of an opinion that payment is a great foot into the door. And then, how do you orchestrate? So you use the word, I think, enablement. I use the word orchestration because you don't stop there, right? You can start providing them accounting software. You can even go into tax software.
The way we see that, because I get asked, are we going into mini ERP and human resource stuff? And the answer is no.
No.
But we are going to connect with the key platforms in each market so that the merchant has a seamless experience. But it's not our business to start building an accounting software. That's a specialization that we're happily leave to those who actually know what they're talking about.
Great. Let me switch topics to something which I think 2 or 3 years ago, Geidea's name was synonymous with. It was everything to do with soft POS, right? Correct me if I'm not wrong. The response to that has been lukewarm to date, right? Unless you tell me that I'm wrong, which you can if you want to, but it is the little I see. If I am correct, why do you think it did not take off like it was expected to? And do you see that change going forward?
There's a more subtle answer to it. If you look at the market overall, it's lukewarm. Like there were industry pundits who said, "Oh, this will be the end of the POS terminal, and everybody will go soft POS because isn't that wonderful and great?" It turns out, no, that's not quite the case. Globally, let alone in our region, the number of POS terminals that gets deployed every year still increases and increases substantially. So the terminal in the near and midterm doesn't go anywhere. But there's an however to it. The soft POS, as we call it, is very useful for 2 segments. One, freelancers, people, we can all come up with the examples. It ranges from the plumbers who do home visits to folks who drive around and who need to take payments. Easy enough. And It's a good product for that. And yes, you get customers that relatively low transaction volumes, but you enable them by the thousands. The other segment, which is more corporate, are companies that have people in warehouses, in cars, delivery drivers, etc., who already have often an Android-based terminal in their hands, and now you can enable that to be a payment terminal as well. And that's good business, but the number of use cases is fairly limited.
So let's talk about the second use case, right? There has been some resistance, even with those guys, to adopt soft POS. Why?
It often has to do with those that have resisted. It has to do with they haven't quite figured out yet how to manage the money flows.
Right.
There is a bit of a compliance and control angle to it. It's not so much user experience. We are finding that in certain market segments, there is a bit of a reluctance to tap your card on the terminal, which doesn't look like a payment terminal of a relatively random person who you've never seen before, who gives you a hamburger in a bag. Okay, is this going well?
Yeah.
And it is frankly no different from the early days of NFC, which I didn't experience in this country, but I was back in the UK, which took 5-6 years for people to get comfortable tapping their card on a NFC.
Here, I think it was COVID. All the work the networks did, right, reaped half the impact as what COVID achieved in 6 months. So you're correct. Yeah.
In the UK, it took a long time.
It did.
Or in Europe, because people were, well, what is this? And I think soft POS may have a similar adoption curve. That being said, we should also keep in mind that soft POS as it is now is slow. The best soft POS is a lot slower than our terminals. We transact in every country within 1 second. It is unbelievably fast. And for example, in Egypt, that is a huge competitive advantage. And soft POS, given the technology setup today, simply cannot match that yet. Whether future kernel developments will put an end to that, who knows? But for now, the payment terminal is still the fastest way of paying.
All right. But you still have hope for soft POS.
Yeah, and we are selling it to whoever wants it, and we are working hard to develop our own kernel, to have full control over the whole stack, and it's going nowhere in the sense of it stays with us.
Okay, I've got another question, right? Which is I think it is a side business, and it used to be a conversation. Again, I go back in time. I used to have with my payment service providers, my acquirers, so on and so forth. If you look at the 3 markets that you operate across, yes, cash is switching to digital payments at different rates, different percentages set at cash, but cash ain't vanishing, right? And there's this age-old debate between cashless versus less cash. So is the future completely cashless? I still believe that I think the future is less cash. Cash will have a role to play. What's Geidea's view on cash management? I know you talked about the fact that you do a lot of that in terms of bill payments, but is there an argument that players like you also need to get into the space where you can actually help merchants optimize the management of cash?
Probably. Well, in Egypt, we're doing that effectively.
Right.
So, for example, part of the proposition is that the merchant receives cash from customers who pay the bills, and it's in the till of the merchant. To save the merchant the effort of taking that cash to the local bank and putting it in their account, we have a deal with them, which sounds easy, but it's very hard to implement it in a compliant fashion, whereby they take that cash out of their till again, and we net it off against the acquiring proceeds.
Okay.
So we use it as a payout mechanism for merchants, which is very useful for them because they still need to pay a lot of their suppliers' cash. So it is an example of how we work with the reality of the local market. As to the broader question, I'm where you are. I think it's about less cash rather than cashless. I find it not a particularly interesting debate. I mean, in the long term, I don't know about you, but I plan to be dead. Yeah, so I don't really know. Yeah, and I don't think it's particularly interesting. Long term, who knows? But for what I can see as a relative business horizon, cash is there. Cash is still there, even in markets that are much further along the adoption curve. And that doesn't mean that there is not a continuous move from cash into digital. It's simply not. It's not a very useful debate, I find.
Well, my debate doesn't take you till the age of you dying. It was more in terms of the horizon, in the horizon of the decade, unless there's something you want to tell us, right?
No.
But no, I do, and this is a question. This is a dilemma I've always believed is that that on the till, right, as merchants having to deal with two providers. One who's providing everything from a perspective of digital payments and one who's providing everything from a perspective of cash was always a very cumbersome journey. I'll be honest, even in a market like the UAE, right? And we would constantly keep going back to our acquirers and they would sort of say, no, we can't do it. Or they'd introduce us to a bank. And then, the banks, the way they manage cash was actually quite challenging. So you should create a scenario. So I thought I'll pose the question. So that one gets out of base. I'm going to switch gears entirely, right? I'm going to take you up to sort of 100,000 feet view, right? What is the state of the union as far as payments are concerned in the MENA region from Renier?
I think it's first of all, we should say MENA to me is a meaningless concept.
I agree with you. Thank you.
And we should yesterday at that conference, I said to folks, Jakarta, Manila, Shanghai, Cape Town, Reykjavik, London, Stockholm, and Marrakesh. What do they have in common? And you'll look a bit puzzled. So, well, they're all the same length of a flight from Dubai. So it's like Morocco is a long way away from here. Yeah. And other than language, there's no sharing. So
and I completely agree with you. The whole concept of MENA is a man-made sort of, geographic cut because someone had to be given a job title. But yeah.
So I don't think there is so much a state off because the countries differ so widely.
Let's take the 3 or 4 countries, or you want to go country by country, but just want to understand in this region, what's the state of payments?
I think there is there is some surprises. Like in my experience, out of our 3 markets, it would be easy to say, Egypt. That's one that is a bit behind, isn't it? Big country with all sorts of challenges, etc. Yet when it comes to fintech and payments, it is the most innovative market that we operate in. The amount of activity on all aspects, payments and ancillary service around it, and startups that are making a really cool product for the Egyptian market. So, well, that is a market that is relatively advanced compared to, say, Saudi Arabia.
Why?
I think it is to do with the position of the banks in both countries and the extent to which capital has flown into Egypt to stimulate the early startups. There's a lot more startup activity.
You don't think it is down to the fact that there's 100 million people, there's diversity, there is a hunger to succeed, which then drives innovation?
Yeah, that may be, but there is enough hunger to succeed in Saudi Arabia with 35 million people as well. It's not that. Yes, of course the countries are very different, and there is no oil in Egypt, as we all understand. And there is, if you don't make innovation happen, it's not going to come to you. It's not that simple. I think it has to do also with the state of banking in both markets. Whichever way it is, it's a very innovative market with a lot of activity. There's still a lot to be done on the payment side. And that is to do with carefully looking at what's happening in other markets and adapting it to local market needs. But there's always an adaptation. I think any foreign company that shows up in these markets and says, we're just going to roll out our business model from the US or from China or from wherever, they're doomed to fail, which is why we see so few global players show up with particularly on-the-ground business models.
Yeah, I think there's no harm in looking at playbooks. There's no harm in learning from them. But I guess you got to adapt that and
seriously adapt here.
And adaptation is harder than one actually imagines, because actually when you land on the ground, there's the reality of how the consumers behave. The regulatory framework is very different. The ecosystem is different. The way your partners behave is quite different.
Yeah, which is also one of the opportunities in this region, I believe. And let's leave Egypt aside, but just take GCC, where the middle C stands for corporation, but there's very little of that when it comes to financial services. Highly fragmented, and the fact that you operate in the UAE means nothing when you want to go to Kuwait or Saudi. And it is both an opportunity for players like us, who I'd like to think have figured out how to operate in that environment, but it makes it costly to operate here. It's cumbersome. I mean, if we want to serve all GCC countries, it's 6 regulatory applications with no synergy between them. it's 6 data centers with on-soil hosting and local data requirements. So I hope that part of the regional lobbying organizations, the agenda that they can take up is a serious dialogue with regulators to talk about some degree of appropriate harmonization and coordination between these 6 countries.
Yeah, and I think that will only actually happen if people like you are in the forefront of those conversations, right? And I mean the fintechs themselves.
Johan, I believe the serious this is not about 200 people having a drink and shouting something at each other.
Agreed.
There need to be a bunch of serious adults who need to engage with regulators at with an appropriate level of deference, but not too much. And there is too much going on in this region of, we're falling over ourselves to thank the regulators, which is fine. But I think a robust debate saying, look, if you want to accomplish this, let's have a talk about what is the difference between starting a fintech in this market versus if you are in Europe with one regulatory regime for 500 million customers. Do you think that there is an opportunity to create harmonization while respecting sovereignty?
Yeah, so I agree with you. You made a point just in the sentence that you have figured out or partly figured out how to work. Does that purely come from the fact that you now have size and scale?
Scale helps a lot. If you are a small fintech, look, we are a fintech, but we are also profitable. We are, our turnover runs in the hundreds of millions of dollars. There's very few of that scale around us, and that gives you the means to do serious stuff. If you are a Series A funded fintech, there's just no way you can incur the expense of creating your tech stack in 4 or 5 different countries, having the compliance functions in 4 or 5 different countries, etc. You can keep adding to it. So scale is a big advantage in GCC alone, let alone when you take a broader view of the region.
So then let me ask you a question. What's your take on what I call homegrown fintechs and their ability to sort of succeed in the future?
Homegrown here?
Yeah.
Well, it depends what success is. Look, I think
success for me is not just about creating shareholder value, but actually creating some profitability, making some money, possibly making an impact.
It's quite challenging because, yesterday at that conference, I said, imagine that the UK split itself in 6 different regions, where the companies in Newcastle are not allowed to serve the customers in London. And also Manchester has its own fintech scene. People look a bit puzzled. So, well, that's kind of what we have here. Yeah, we split 52 million consumers in GCC in 6 countries without ability to really sell financial services to each other. So the market is a challenge. To do anything else than mainstream fintech, payments, that's big everywhere. BNPL is a big one. But the moment you start talking about more niche-oriented fintech products, there's just no market for it. There's not enough demand in each of the individual countries. Not even in Saudi, which is the big gorilla among the 6. Second, if a lot of fintech ultimately needs to exit by selling to an incumbent bank, insurance company, or asset manager. Very fragmented. There's very few banks here that have significant operations in other countries. It's still very local.
Completely.
So then you think, okay, we not sell to a bank or an insurance company, we go public. The grand total market cap of all the stock exchanges in GCC combined is the same as the Amsterdam Stock Exchange, which, slightly smaller than Paris and about the same size as Frankfurt. So it's all right. Now, you take out Aramco and half of it drops.
Yep.
So the exit market is also hard. And while we'd like to talk about impact on society, true, but the investors need to see a return. They need to get out somehow. And that means that the regional ecosystem, I believe, with the support of regulators and ultimately governments, needs to take a hard look at, okay, how are we going to build something that is of value beyond a handful of companies that will do well?
And unfortunately, that is, and I think that's kind of what is required if you really, really want to unleash genuine innovation, because I've seen pretty much a decade where the vast majority of the fintechs are Me Too's, right? Someone launches a product, they get a little bit of coverage. 6 weeks later, you have 12 other people who sprung up with the same model. And as you said, there isn't enough consumption in the market. There's definitely not enough capital to follow them in the current market, and there's no exit. That was a question I just wanted to plug because you said something, so I caught on to it. But coming back to what we were talking about a couple of minutes ago, which was around, sort of trends and the state of the condition of sort of fintechs in the region. If I take a global perspective, right, what are the kind of sort of key trends you keep a close eye on? And this is globally, right? Because as you said, there are ideas globally that you can beg, borrow, learn from, and then apply. Right. And specifically, I'm interested to hear your view on technology. Right. So which technology trends really interest you at Geidea as an individual?
There's a Geidea answer, which is, anything to do with payments we look at. But at a personal level, I am completely obsessed with AI.
Right.
And
So you spend every weekend learning how to prompt.
Well, that has been like my speech yesterday was completely AI generated.
By the way, I loved that blowing your own trumpet
thing on LinkedIn, right?
And I took it and I actually put it on my own because I was blowing my own trumpet. So I said, before you put it, why don't I just do it? I'll preempt it.
Well, look, it comes with being a fintech influencer, correct? If you
I'm
don't make sound.
I'm not an influencer to anything or anybody.
Okay, very good.
I'm just a simple commentator. That's what I am.
And so I think that will change financial services as we know it, because it will change retailing. As I was dreaming about how I think things will work a few years from now, I think that we will not go to shops online or offline, and instead we'll ask some personal assistant, see this picture or whatever. Remember Tom Cruise in Mission Impossible 6? I'd like the bomber jacket that he wore. And I'd like it from an eco-friendly company with zero hassle return. I like to spend $500 to $600, but if it's a little more, all right, where do I go? And there's the answers. And one step further is do it in my shopping basket and what have you, because it's so powerful, and we ain't seen nothing yet. Just today, I was at that investor conference where a company called Veritone, I'd not heard of them, from America, was presenting what all they have done.
Yes.
They've digitized all the sports archives in America, whereby for thousands of historic NBA games, you can say, show me what Michael Jordan did in the championship game in 19 whatever, and tell me what shoes he was wearing, or where do I buy the memorabilia shirt and what have you. And it's early days. So I think that is going to be something that has a very big impact on payments as well, in a way that I can't quite oversee. The obvious applications are fraud detection and what have you, but it will change the payment experience. So I think that's a big one, and it's probably, I think, if I had to put money on it, it will make the so-called smartphone revolution look like a relatively small thing. So who knows?
What else?
I can't think beyond that at this moment. I'm completely obsessed with it.
So what's your take on blockchain?
Yeah, I think it's a solution looking for a problem.
It has been for the last decade.
That's why you're
starting to see applications now.
Yeah,
maybe
but
not
it's
on the
still
payment side so much, but definitely
exactly.
on cross-border payments. But you are starting to see some applications.
Yeah, but I'm still chairman of a company called TransferGo. They do remittances. They did a partnership with Ripple years ago. And the notional promise was we are going to revolutionize cross-border payments and take cost out, and we do this and we do that. And in fact, nothing happened. And it's a non-value proposition that makes no sense. And I'm still highly skeptical about blockchain or crypto as a payment mechanism. That doesn't mean that it's not relevant for certain cross-border payments and as a store of value. Particularly, I'm still one of the Bitcoin believers in that regard. But when I see articles about retailers accepting Bitcoin to buy coffee, I never can resist the temptation to put you want to pay with a Swift transfer for your coffee as well.
Nor can I, right? Mm-hmm. And it's all well and good when Bitcoin is doing this. Everybody wants to use their Bitcoin to so-called buy cups of coffee. As soon as the Bitcoin does that, right, you're like, oh, I'm never going to buy Bitcoin. I think it's a Bitcoin. But I'm going to let you finish because that's a whole area that I do want to dwell into. But I'll let you finish, please.
I think with crypto, because it is so exposed to the general public, I can't put an exact percentage on it, but somewhere between 95 and 99% of people have no idea what they're in fact dealing with.
Yeah.
It's herd behavior.
I think
It's
99%.
and so I'm in the category skeptics of most of the crypto out there, and a bit Bitcoin being a real exception for me personally. And I get Ethereum and smart contracts and what that can do. And there are a lot of interesting private blockchain applications that are coming up in financial services, but not so much yet when it comes to
Coins.
anything that is relevant to merchants and point of sale and online payments. Also because the on-ramps and off-ramps are still very expensive, and you really want to be careful once you are in crypto, whatever you think of it. Going in and coming out is an expensive hobby as of now. Makes interchange look like a very, very small amount.
Yeah. No, so agree. So let me take, we'll call it digital currency. Okay. So and let's break it down, right? So we have the world of CBDCs, right? Which I don't know, 90%, if not 95% of the central banks are all going gung-ho on. Some people are experimenting, some have actually launched. There's the retail side of it, there's the wholesale side of it. To me, the wholesale side of it makes a lot more sense. You can actually implement it quicker, faster. It helps with cross-border payments, which is actually the larger chunk of what the payments are. What's your take in terms of CBDCs coming into this market? How do they impact Geidea's strategy in the next 5 to 7 years?
Not is the short answer. CDBC, I look first, whenever it comes, and indeed everyone is experimenting with it. It doesn't really change very much the need for payments in a certain way at the point of sale. Whether you process a CDBC, whether a Visa, MasterCard, Amex, which I think they're going to be there for a little while, whether that's funded, it's funded with fiat. And there is no in principle difference whether that comes out of a ordinary fiat bank account or anything with CDBC attached to it. I think CDBC is something that, from a consumer point of view, is not well understood. People think, it will somehow maintain its value. Well, it won't. It's just the same. Your CDBC dollar is the same as your ordinary dollar. And I believe people will wake up and have woken up, and we're seeing it in Europe and the US, where inflation, of course, has been running away. And just in prep for our chat, I said, let me look it up. Gold. Gold in 1793, the first time that there was a gold price, $19 per ounce. And then it stays there for a very long time. In 1973, gold, 1973 is relevant because the US let go of the gold standard in that year, gold $40 per ounce. So we had gold inflation, or US dollar real inflation, of about 100% over a period of 170 years. Yeah. Gold today, $1,900, from 40 to 1,900. And by letting go of the gold standard, inflation, which in my view runs much higher than the official published numbers, 40 to 1,900 is a good indication. And that will not be solved by central bank digital currency. The inflation will be exactly the same. In fact, it will be cheaper to print more money because it's the press of a button as opposed to anything physical. So I'm a bit skeptical about it. I'm not entirely sure yet what the real use case is beyond cross-border and what have you. I don't see the point so much of blockchain settlements, of central bank digital currency. What problem is it trying to solve? Now, I'm an old man, and as they say,
again. There we go.
Many people tell me, look, the first advice I got in my career was, look, you know what it is in life? From an old man like I'm now. Old people like me have bad experiences, and young people have good ideas, and we need to marry the two. So when I don't get CDBC, I wonder whether I'm just not getting it.
No, there's a whole different debate to be had, and there are better people than me to actually have that discussion. I do think there is a place for CBDCs on the retail side. Do they completely replace fiat? No. I think in certain economies, especially where I would say the parallel economy is rampant, it does allow government to take better control of the flow of money, which does have an impact on inflation from a perspective which is positive. But I do think with the momentum behind CBDCs and the collective momentum behind it, I do think we're going to start seeing these within the I guess the suite of products that we have, right? By no means am I suggesting they will come and replace something, and by no means am I suggesting that the Visas and the Mastercards and the Amexes are going away.
Well, it will compete with local in our markets, MADA in Saudi Arabia, MADA debit card, which today runs at a fairly low rate for most merchants. So it's not straightforward to see how CDBC, which still needs to go to switches and what have you still need a clearing and settlement to make that cheaper. Well, we'll see.
Yeah, we'll see. And there's a whole angle around faster payments, and what India's G with UPI.
Yeah, that is of course
right.
But you don't need CDBC.
No, you don't. You don't. And now they're working on the digital rupee. They see it as a complementary offering, and so on and so forth. I think this entire area is quite fascinating. Different people have different views. I think they're much smarter people than at least me, who understand this to a level of detail that's far greater. I actually get more excited about the wholesale side of CBDCs, to be honest with you. Retail for me is one which is kind of wait and watch. What's your take on stable coins, or the not so stable?
I don't think they're stable. That is a first stable coins provided by third-party providers, so not government-backed. Very tricky, and we've seen enough in recent months on the governance in some of these crypto companies that before one puts their money there, you better make sure that everything is cool under the hood, because the basic concept of give me $1 and then I give you a crypto that is worth a crypto coin that's worth $1, and then I charge you for that, and then you can do nothing with it. I don't get it. So it's another thing. Well, I'm not entirely sure, and I think we're past the hype already. You read very little about it at this moment.
Okay. Yeah, no, I don't disagree. I do think stablecoins, if they will solve the stability issue, right? I do think they will have use. I totally believe that the altcoins, right, putting Bitcoin aside, I think not convinced necessarily that they have any mileage. Yes, the underlying platform on which they exist, so Ethereum versus Ether, is a whole different argument to have. Let me go to a different part, right? A more topical conversation. And as a matter of fact, earlier this morning, I had the opportunity to be a part of a forum where there were 22 central banks, and we were talking about embedded finance. And we were specifically talking about BNPL and POS financing, right? I'm firmly of an opinion that the regulator will single-handedly decide the future for this sector, right? And the reason I say that is because for me, BNPL sits somewhere between lending and easing someone's cash flow, right? Because the average ticket size is about $150, $500, right? What's your take in terms of this hyper growth we've seen in BNPL and POS financing? And I'm not asking for a payments perspective view, because it's actually morphed, right? I think the lines are blurred between BNPL and payments. What's your take in terms of this market? How do you see BNPL and POS financing evolving?
I think BNPL to me is credit. The moment that you give something now and pay later, it's just a nice word for credit. It's for me credit without using the C word.
You don't like calling it extended payment terms?
Well, it's fine. It's credit, correct? And as with all credit, it's really easy to lend money. It's very hard to bring it back. And that's what we're seeing in the global darling, Klarna, who are evolving, they're pivoting their business model, and it is in part because the credit losses are really tricky in BNPL, and regulators in countries where BNPL has been around for a little longer, they're all having the same discussions. We need to regulate it like credit. We need to do the same affordability checks and what have you that we do on quote unquote regular credit, and that will put a big damper onto that sector. So I think BNPL will be the young generation, because it's mostly people, not only, but it's disproportionately people in their 20s and early 30s and sometimes teens who use BNPL. It will become a version of credit like credit card was for other segments in the market. And therefore I think there will be a regulatory clampdown. Once the lead regulators start, other regulators will quickly follow, and it will be in our markets here as well. And that in turn will put a bit of the brakes on the sector, make it more responsible. Things like responsible lending will become more important. And it's just one other checkout method, not quite as hot as everyone.
So what's your
thinks
take on it? The sector dies?
No, there'll be a few left standing, those who actually understand credit management and know how to underwrite without rolling over endlessly and what have you. So there will be a shakeout, and all the copycats will be gone.
Yeah, and I agree. And I think my hypothesis is that the BNPL model by itself is just not profitable enough, even if you are into responsible lending, right? I do think that they'll have to evolve that business model. They'll have to add more bells and whistles. Right now, whether they morph into becoming SuperApps themselves or neobanks or go get a banking license, they've got to figure out the margins with which they're playing, right, just doesn't allow them, even if you run the business well, right?
And the thing is with BNPL, even today, when you go through the P&Ls and read the fine print, a lot of money is made on the rollover at the end of people who, in fact, buy now, pay never, or buy now and pay too late. And you get hit with the late fees and the rollover fees. And
it's not different than the credit card business.
That way, the same thing, yeah? I mean, credit cards don't make money on people who pay on time.
No, they
by
don't.
and large.
Yeah, but that's why this country, this part of the world is brilliant. In the UAE, I think revolve rates sit north of 40 to 50%. Average APR sits at 39%. It's a money spinner for banks.
It's very hard not to make money with that.
Yeah,
and
exactly.
then in turn, at the end, the rules are such that it's also very hard to default forever. The bankruptcy rules and what have you are not quite the same as in other markets.
Biometrics, right? So we're moving from this world of contactless to invisible payments, right? Another two great words. Your take on biometrics?
Yeah, I think I really sound like an old sort of grumpy guy.
But that's right. It's consistent.
It's
I like that.
consistent
It's
at least,
Renier,
right?
you're consistent.
I'm
least,
thinking,
right?
all right, I haven't seen the use case yet. I think fingerprint is annoying.
Yeah.
It's not fine. I'm just thinking today, we all carry our phone around wherever we go. Yeah. So the phone is never far away, and it is really a pretty cool and quick experience. So whatever we do with biometrics, why is it better? It could be safer, it could be cheaper, it could be faster, it could be more convenient. Yes, in the very occasional situation where someone doesn't bring their phone or whatever the wearable of the future will be, all right, there's a role for it. But I don't see quite the compelling use case yet. Now, second, enrollment. Enrollment is a big deal. You don't need to enroll in your Visa card, or you do it once and you're done. Facial or fingerprint or whatever else we come up with will require enrollment. And that requires, in my view, either a national scheme or an international scheme. And international schemes can only come via Visa, MasterCard. So you're still, your face will become a way to pay embedded in your Visa card. And then the infrastructure that retailers will need to put in place, where speed will be really important, because this will not be adopted unless the likes of Carrefour, in the checkout line say, yeah, we're good with face and it's faster then. And then there's the local sensitivities, like how are you going to do it in countries where half the population, cover the face and etc. I see a lot of it's gimmicky, and I know people here are experimenting with it. From a Geidea point of view, if our tech-savvy colleagues come up with something nifty that has PR value, I say, yeah, let's do it. But certainly not from a business point of view. It will not make money. It will be irrelevant in the foreseeable future.
Okay, interesting.
But I don't have a strong view just yet.
Well, nobody does, and I think there's a little bit of trial and error. I'll be honest with you. When I first saw facial payments, I actually went back to the provider who had come to us, and I said, I don't want to use this for payments. I actually want to use this for loyalty. And my use case was that one of my companies, which was within my, my remit, was a big box player, right? And the challenge we had was that the moment of truth of recognizing Renier as a loyalty customer was right at the end of a very cumbersome journey when you produced either a phone QR code or a card which said, hey, you were a customer. My argument was, if he were to recognize Renier at the point he entered the store, and obviously the registration happens when you apply for the card, right? I had the opportunity at that stage to do an intervention with Renier, because let's assume you're a platinum customer, right? And walk up to you and say, well, welcome back to the store. Would you like some help, right? And that was the nature of the store where help would help. I got a lot of pushback because the provider wanted to do payments. And I basically told him, I'm like, if you can solve this use case for me, we can talk about payments at the end of the journey, because that's at the end of the journey. I agree with you. I do think that people have taken biometrics and run straight into payments. I think there are a number of other things in an overall consumer experience which could be solved with biometrics in a bit bigger way. So I think the jury is out for me too. I do think that there will be a cohort of people who will like it, right? I think it'll have to be a lot slicker because it isn't as fast and efficient, at least that from what I've seen, right? Let's go to a topic which is very topical these days, right? Open banking, open finance, right? Mostly what we've seen, at least in the countries in Europe and the UK where open banking or PSD2 has been implemented, the typical use cases have been PFM, account aggregation, right, and payment initiation, right? We've obviously got impending regulation on open banking coming in KSA. We've got open finance coming in the UAE. These are two markets that you actually operate in. What's Geidea's view on this? And does it make a difference to the way you are operating? And are you prepping for it in a different way?
Not yet today. We're watching the space like everyone else. Looking at Europe, it hasn't really impacted the payment landscape in a very significant way. Yes, for certain large ticket items, payment initiation helpful. Open banking, very few providers who actually make money. And it turns out to be a scale game, even in Europe. So if I think about earlier in our conversation where we talked about GCC, 6 small countries, well, good luck if you want to be an open banking provider in Kuwait with just 1 million Kuwaitis and 4.5 million people and make money. Hard work. It needs to be a regional play. And then we will tap into that. I don't see open banking and payment initiation and as a replacement payment method at the point of sale just yet.
Okay.
The country in Europe where it has taken the biggest flight is Germany with Sofortüberweisung. And even there, it is a relatively small part of the overall market. So I wouldn't expect miracles from it in our space over the next couple of years.
So wait and watch is your answer to that. Right. No, I don't disagree with you on that account. I do think that it is one that you need to watch. I think where it might get more interesting for you is actually downstream. Now, I know you don't necessarily use your own balance sheet to lend, but I do think that one place that's where here things could be slightly different in Europe is the adoption from, I guess, the lenders in terms of being able to access, the data that's available to them so that they could leapfrog the incumbents in the market.
Yeah, for data, sucking the data of the consumers or the merchant's bank account for underwriting purposes, that is a no-brainer. That doesn't really impact us so much, but on the lending side, that is very, very helpful.
So let me ask you the next question, and maybe you're going to give me the similarish answer. So we've got lots of super app or everything app madness going on. Okay. Well, again, I use the word madness not in a negative sense, but in terms of it's caught people's imaginations, right? More and more people are calling themselves super apps, whether they're offering 1 or 2 services. As soon as they offer more than 2 services, they believe that they're a super app, right? Again, this doesn't need to be a Geidea question. I think it's a question from, let's combine in both views. I'd love a Renier view on both super apps and these multifunction apps, wallets, if I may call them, right? Do you see them capture the imagination of the consumers, right, in some of the markets that you operate? And again, your answer could differ by the market. And what role do you want to play in this if you actually see 1 or 2 of them steal the march?
For now, first we don't see anyone steal anything. The largest in our region, I guess, would be STC Pay, I would think.
Yep.
And that's at what it does, and some peer-to-peer stuff, and even occasional local payment and airtime top-ups. It does what it says on the tin, and it's a perfectly fine product that integrates nicely with your STC services. Before joining Geidea a few years ago, I was on the board of Revolut for a while. Okay. And now Revolut is one of the, at least in the Western world, because the real super apps are all in China. And if we want to see what a super app can do, go over there. But it doesn't easily translate into other markets.
Everybody's right. You look at Grab, I think year 10, they've announced a $200+ million loss for the first quarter, right? So 10 years later, they're still not making money.
And the interesting thing, even in the case of Revolut, 30 million customers, very feature rich, including completely useless things like whatever lounge access in an airport. It's kind of nice, but then I tried it once or twice and said, no, but it's not this hour. Or you had to pay for your ticket. Anyway, it's all sorts of nonsense stuff. And even for that company with that scale, completely focused on getting a banking license because they figure that at the end of the day, the money in consumer financial services is mostly in lending, where you borrow cheaply and you lend dear, and that is and the spread is your income. So I have no reason to believe that that's not going to be the case in other markets either. And we're immediately back to scale, which is, well, if we operate in 6 different geographies with different licensing systems and all that, it becomes really expensive to build a regional super app. The only country where it has any chance would be in GCC, Saudi Arabia, and to an extent Egypt. And a company Fowry, certainly one of the oldest fintechs in Egypt, has a product. I'm not sure it gets, frankly, much traction. So I think it is something that is hyped, but we cannot really point at examples. Look, what is a good example of the, not even call it the super app, but the consumer-oriented money apps? Cash by Square, or now Block, that's a good one. Revolut is on its way to accomplish something. The folks in South America, but they're few and far between.
Yeah, so Rappi doesn't make money either, right? Right now, not that I'm aware of, right? And Rappi belongs to that same generation of Gojek, Grab, Rappi. They all kind of came around at the same time. Venmo works because of the the PayPal relationship, right? And it's largely a closed loop environment, okay? And I think with this Visa's new move where they're allowing interoperability across these closed loop platforms, was the question I was going to ask, was that if players like STC start to scale on the P2P side, and let's assume there are a couple of other players who are able to scale on the P2P side, and interoperability becomes an option, right? In terms of being able to use one closed scenario to another. Doesn't that actually create a bit of a threat and challenge for you, which could emerge very quickly?
It could, the moment that merchants become part of that settlement network, but the form factors will be different. They've experimented with it, where you need to make a picture of a QR code and then it connects to your wallet and then you send the wallet, but it needs to also show up at the merchant and integrate with his cash register. It is really quite complex to make it happen. And I'm not sure yet. I know there's some good stuff happening in India. Google has done really interesting stuff there. But in our markets, I'm not yet seeing it. We need to be worried about it, to the extent that the growth in our markets is still so. I mean, look, our acquiring business this year will grow 3.5 times. Last year, it grew 3 times. So that's 10 times growth in 2 years. When that's happening, you don't really need to worry so much about what's STC Pay doing. The market is big enough, and we need all our focus to grow our core to make sure that we are not getting distracted by little shiny objects on the horizon, and in the meantime, forget about where the action is today.
No, I agree. Renier, I'm not going to disagree with what you're saying, but I also think one doesn't want to risk getting blindsided, right? Because things do catch up very quickly, and that's the funny thing about technology, right?
True.
So while I totally appreciate that, your focus is great, there's tremendous growth opportunity where you are, I've actually seen disruption in a lot of markets come very, very quickly. I'll give you a very simple example, right? Let's take BNPL, for example. I know it's not the most attractive sector. Klarna, Affirm, all of them were having a great time. One fine day, PayPal decides to launch BNPL. Latest numbers are PayPal is by far the biggest BNPL player. They had the landed base because they had all the merchants, right? Basically, all they had to do was switch on an offering, which they switched on very, very quickly. They had Venmo on the front end, right? And very soon they'll activate the Venmo customer to be able to make a transaction, right? My hope is that we do see some catalysts like that in the market. Now, I cannot comment on what STC Pay is doing well or not, but I do think STC Pay does have the ability, if they get this right, right, to become actually quite a formidable player in the payment space. Because actually all their use cases, largely they're relying on cross-border payments currently. They do some P2P, right? They could go to P2M quite quickly, right? My humble opinion. Because let's be honest, 80 to 85% of the SMEs in Saudi Arabia work with STC. So what stops them from saying that, we can create that environment, that closed loop environment? Now, maybe it's a difference of opinion.
Who knows? I mean, I don't know the answer to
Yeah.
what stops them. For now, they are not.
No, it's a hypothesis.
Not moving, and
Yeah.
it's a bit like. Look, I've been in many discussions. To go back to that company, TransferGo Remittances, where I participated in 3 fundraising rounds now, and many VCs. Yeah, but what if Facebook wants to do this tomorrow? Yeah, that's true. The sort of what if Facebook, or the local equivalent, what if STC Pay? Yeah, fair enough, except they're not. Maybe they will, and then we will need to respond accordingly. But for me, the line between getting blindsided and getting distracted is a subtle one.
Okay.
And we just need our focus to execute on our plans for the next few years, and we need to outrun, the next guy. We don't need to outrun the whole market, and therefore focusing on our core, where we think we have a big runway, is what we're doing.
So where do you see your biggest competition coming from?
The biggest.
You don't have to name companies.
No,
but,
look, the biggest. It's a different answer in different
Take
markets.
KSA,
In Saudi Arabia,
which is the biggest market.
The biggest competitor is the false pride of the banks, who think that they can, who will throw a lot of money at what I believe is a long-term illusion that they will be the only banks that I know in any market who can continue to innovate, and who in the process are subsidizing basically one part of the business and making it up somewhere else. So that's a big competitor in Saudi Arabia.
When you come to the UAE?
In the UAE, look, there's behemoths here relative to us.
Yeah.
But they leave a lot of money on the table by frankly not being very good on the customer service side.
Okay.
So there I'm less worried from a competitive point of view. We see that we are able to make inroads even at this very early stage, simply because we are more focused on what that customer needs than the large ones are able to do. So,
Egypt, where you're a bit of a, if I may call you a late arriver. There's no late, I would say.
No, Egypt, the banks, unlike say KSA, the banks in Egypt are really not very good at this business and have no aspirations to get better.
But there are a number of payment companies out there.
There are a number but it's a big market. So we today, in terms of number of new installations, we are the second biggest already, and that has a lot to do with the people that we recruited there.
So we didn't touch on one, partnerships, right? What's Geidea's view on that?
On one hand, we have lots of them, correct? I mentioned partnerships with the banks are our partners and our competitors, so they're very important to us, and we manage that relationship with the utmost subtlety and tiptoeing at times. Partnerships with the lending companies, partnerships with our hardware providers, because at the end of the day we have not that far from 1 million POS in these 3 markets, and we're big customers to them. They are big suppliers to us. So partnerships are everywhere. Our partnerships that we are working on in the world of buy now, pay later, the broker relationships.
Yep.
Look, we use nowadays the word partner fairly broadly. Anyone you do business with. Regarding partnerships with global behemoths, we are in discussions with very large global acquirers to be their local scheme acquirers, and that is especially relevant in Saudi Arabia, where there is MADA as a local scheme. They can't acquire that because they need to have all sorts of local setups. So that's a really interesting way of opening up a market for them, while at the same time giving us a way to tap into their customer flows who normally would be out of our reach.
Okay.
So there's a fair bit going on.
All right. My last 2 questions. I know I've kept you here for a long time. We talked a lot about, and we actually talked the majority of it around payment acceptance, right? And the ecosystem which goes around it. Is Geidea's intent, and please choose not to respond if this is something that you don't want to be public about. Are you looking at the other side of the value chain too, in terms of issuing?
Yes.
You are. And in what
Not consumer issuing, but certainly merchant
issuing.
as a way for us to do real-time settlement. That's an important initiative. We want to be able. My hope is that, and it's our firm aim, in fact, that we will be able to settle with the merchant within seconds of doing the transaction on the point of sale. Now,
that
sounds good. There is a lot of there's
a lot of
risk
work to be done.
all sorts of bells and whistles, but it's sort of same real-time settlement is the clarion call internally, and I'm keen that we bring that to our markets sooner rather than later.
Okay.
Now that makes us effectively an issuer. We also would like to provide our services then as a platform to other fintechs, so they don't need to build their own stuff. Consumer issuing is not part of the deal.
Totally agree with you. So, last question. I know you said you're very focused and you don't want to be distracted, right? But I'm going to push you to say, give me a sort of a 5 to 10 year view on Geidea. Look in the future. What
I'm
is
the
this?
wrong guy to ask that, Arjun. I have this view that anyone who pretends to know what will happen over 5 to 10 years is full of, you know what? I have no idea. I can look a couple of years ahead.
So there's a clear point of departure for you, right? So we've talked about the point of departure. But what does this point of arrival look like, right? For Renier? Because, a couple of years, we've already talked about it. It's about doubling down on what you're doing, adding a few bells and whistles here, doing things that you're not doing so well better, partnering with more people. But I really want to hear what is at least the first landing of that sort of that aircraft, right? 5 years from here, what does Geidea look like to you?
In 5 years, we'll be a regional public company. We'll be one of the first homegrown fintechs that will go public in a local market and be seen as a homegrown champion in the countries that we operate in today, and a few more flags, probably flags that are, they're certainly in MENA, but probably this side of MENA as opposed to very, very far away. And so it is in the end about market impact, market share, market performance, and shareholder performance, because we can clearly, we're in the business to create value for shareholders as well. As you know, we are majority owned private equity, and with a very substantial minority by our founder, who has been on your couch already. And
who's been on my couch?
There needs to be a realization of value in that time frame as well, and that is where, of course, an important part of the focus goes. So a regional champion built in Saudi.
Built in Saudi with a few more flags closer to home, right? Creating a lot of value for all the ecosystem.
Inshallah.
That's a great way to end. Renier, thanks a lot for your time.
Thanks for having me.
Right, and thank you for making time from your schedule to be here.
Cool to be here.
And I'm sure our paths are going to cross very soon, either in your offices in Saudi Arabia. Luis keeps inviting me to your offices in the UAE. I have to visit them.
Yeah, you should. Yeah. It has a very nice look and feel.
Yeah, he
very consistent.
He keeps telling me that.
Yes, very nice.
So with that, thank you again.
All right, you're welcome.
All right.
Thanks, Arjun.
So everybody, that was Renier Lemmens, who is the group CEO of Geidea. You heard him talk. It was a easy conversation, to be honest with you. As I said it, he says it the way he sees it. I'm sure you'll all enjoy the episode. With that, goodbye. Thank you.